And the Kospi, along with Japan's Nikkei, the UK FTSE, and the German DAX, all handily outperforming the S&P in 2025 amid a weaker dollar. Should we expect that to last this year, especially with everything going on now? Joining me to discuss is Tim Seymour. He's the founder of Seymour Asset Management and a CNBC contributor. Korea
Hi,
up
Kelly.
75% last year. Tim, welcome. Just kind of put this all in context. Was it a one-off, or is this part of a larger theme you think has legs?
Well, I think a lot of the Korea trade, and if you look at the Kospi, and investors can own it here by owning the EWY, which is an ETF, it's 25% Samsung, it's 18% Hynix. I think this trade continues. I think the dollar dynamics continue to be weaker, and therefore I think a lot of the Asian currencies, which didn't outperform the dollar as much as others, that they may take their cue from the rest of the world in 26.
Whether or not the situation in Venezuela is a one-off or there's more to come, or it causes some kind of reaction in China, does that affect the way that you'd be placing your bets here?
As somebody that's long China tech in IDEVO, my ETF, we have overweight positions probably at least relative to ACWI, ex-US, and Alibaba, Tencent. I'm a little concerned on what this really means outside the headlines. And I think this, if anything, probably means we are more entrenched on the rare earths dynamic and what's going on in South America. I think China is still incredibly interesting, and Chinese tech companies are interesting because China is not beating up their own tech companies anymore. So I think there's a real opportunity there. I do think that global markets overall, it's not just last year's trade. I think people are waking up and understanding they're probably underweight international. They have been. And I think even on a market cap weight basis, there's great opportunities for some of those same trades in AI tech that we're working here. Even today, you have companies like NXPI or ASML getting upgrades. The hardware part, the memory part of today's trade is certainly clear to be global.
It's interesting you say that. We're about to talk in just a moment about some of the IPOs and the wave of activity we're seeing in China. But you think that's a theme that, in some ways we're talking about this arms race, one country versus the other, but you think American investors should just participate in it?
I think they should. I think, again, for investing globally, not only is it just a dynamic of being underweight. I think Fed dynamics, our Fed, if anything, is probably cutting a bit. The rest of the global central banks have probably completed that cycle. Global growth is better than it has been in a long time. Earnings revisions higher for global companies. They trade at a discount. They always have. But I think it's a very interesting time.
Would you do anything in Latin America, either to try to get ahead of maybe better growth prospects, or the opposite and retrench, or just kind of is that an area to stay away from for now?
Well, the industrial and precious metals trade is very much a Latin America trade. I think copper, especially Southern Copper in Peru, ECH, you can own Chile, Antofagasta. I mean, these are trades. Also, global gold trade is very much a Latin American trade. We have a big election in Brazil coming up. Is it going to be a case where I think some of the socialist tendencies of Brazil are also things that are under some pressure? I think Latin America is pretty interesting. I think Brazil is going to outperform. All
right. So then finally, you think that international markets are going to have another year where they do even better than the U.S. ones, I imagine. And because you see weak dollar, strong commodities, 2026 sounds like part two of 2025 then. And investors, you think, should not fear that they've already missed the big moves.
They should be happy that they're probably underweight for 8 to 10 years of underperformance. I've been investing globally since the late 90s, and we've had different periods. I think these are long tail trades. I think these are mean reversion trades. So that's just kind of the technical argument. So no, you haven't missed it. It's a valuation story. It's a give back story. It's an earnings growth story. It's a weaker dollar story. It's that these are global companies that are also involved in the same trades that are working here. And that also means money center banks, European money center banks, or utilities, or some of the dynamics, the deficit spending to build up arms and defense. These are global themes, and the same things are happening in other countries. And yeah, I think it's going to continue. And if global growth is kind of in line or a little better than people expect, I think they're going to outperform that much more.